Okay, traders, welcome back into this video series for Community Scripts. I'm delighted to bring to you the all-new VMLean indicator for the Tickblaze trading platform. Now, what's really powerful about the scripts and the indicators inside of our community is that you can actually get them for free. So when you log into Tickblaze and then you go into the community, you can actually go in and actually find the VMLean, download it into the platform, and then you can follow along with this video. Now, there's another video that I filmed previously that's talking about the multi-time frame filtering, and it also uses the VMLean. I suggest you check that out as well because this is a directional tool. It is a momentum oscillator. It can be used for directional bias. It can also be used for trading signals. And in this video, I'm going to talk to you about all of the different aspects of the VMLean, what it's designed to do, why it's such a great tool as opposed to other oscillators, and everything in between. Okay. Now, if you want, you can click below this video. There's a link that should bring you to the community post where you can get some more information on the tool. And hopefully after this video, you'll have a full perspective of how to use this for your trading. Now, I'm using just one chart for this example because there's several different aspects I want to touch on with regards to the indicator. So the first thing I want to do is I want to just basically maximize the oscillator panel for a second, okay? And what we're going to do is we're going to talk about the two components and what they're doing, right? There's the red histogram, and then there's the green histogram. We call this, the histogram is equal to fast momentum, okay? And fast momentum will always change quickly. And then we have these Bollinger Bands. You can see these bands here. These are volatility bands, and we'll call them the BBs, the Bollinger Bands. And this is considered slow momentum, okay? Now, fast momentum will always change before slow momentum, but slow momentum will always follow suit and then be a lot stronger than fast momentum. So you'll often see that the oscillator will change on small rotations with the histogram, but what the BBs are doing, these are telling you the bigger strength of the market, okay? Now, there's one other component to this oscillator, and these are what we call the excursion levels. And there's 1, 2, and 3 levels. 1, 2, and 3 levels. These are considered overbought and oversold levels. And what's unique about this is this isn't an RSI. This is not a stochastic. This is not a CCI. These oscillator levels are based off of the histogram's velocity cycles. And the histogram is actually using a series of multiple sub-indicators that are detecting cycle analysis in the market. And what these do is these actually change and they rotate based off of the cycles. So they're never a fixed variable like a static number, like on an RSI, it's always like an 80 or a 20, or a stochastics is like always 100 and 200, right? Or whatever the case may be. The point of the matter is that you have a dynamic oscillator that's always going to change. And when we go into the excursion levels, you change them to dynamic. If I change this to a time-based chart, you're going to see major movement. So let's change this to a time-based chart for a second. You're going to see that these are dynamic levels because the market is always changing with regards to volatility. If you put this on a range chart or a Renko chart, the volatility is always static. But if you put this to a variable range bar, like let's say I want to go to the S&P, and let's just change this back to like 1 day of data. Okay, let's do this. Oh, it's the weekend, so let's go to 2 days, and there it is. And let's go to a volume chart, and let's put it to 10,000 units for a second, okay? It's gonna load the tick data. I'm gonna pause the video while it's loading. Now that it's loaded, you can see if I'm using a volume chart, you can actually see the levels moving. And there's a reason why that's important. It's important because unlike a static oscillator, which is RSI or a CCI or stochastics, volatility is adaptive. And so what we're doing is we're constantly studying the cycles of that adaptive volatility, and we will adjust the overbought and oversold levels to be reflective of the market's movement. Now, the key thing here is that there's many different ways to use this type of a tool. You can use it for directional momentum. You can use it for confluence and trending markets. You can use it for divergence on fast momentum and slow momentum. You can also use it for overbought and oversold levels. So let's start with the first one, okay? The first thing you can do is you can use it. I'm going to turn off the excursion levels here. What's nice is you have these drop-down menus where you can literally just manipulate the information quickly. So I'm going to turn off all the overbought and oversold levels. I'm also going to turn off the flooding. The flooding is ultimately designed to help you with understanding the bias. But a couple things you want to pay attention to is that the histogram is going to shift from negative to positive, and that's going to give you quick momentum moves. You're going to get some pushes in the market, okay? But you're going to notice that the Bollinger Bands and this information is still very much below the zero line. It hasn't crossed yet. And there's a reason for that. Is like I said, the momentum is going to switch fast, and then there's going to be changes. Now, I know a lot of traders that will use this oscillator, and they will wait for both the histogram and the BBs, which are the dots. These BBs are the connector dots that are tied to every price level. And what they do is when they get outside of the Bollinger Bands, it's very strong momentum. When they get outside the Bollinger Bands, it's very strong momentum. And what a lot of traders will do is they will not trade when they see this mix of information. You see how it's got negative momentum, but this is now on the positive side. It doesn't make sense. The market's in transition. But you can notice here that when the market gets into a state of confluence, you can see the market tends to give you a lot more follow through. And as a directional trader, if you're a momentum trader or if you're a trend trader, you want to be paying attention to that. You don't want to be trading what we call the chop zone. These chop zones are going to basically be where the market's trying to figure itself out, and then all of a sudden it kicks off. This is that consolidation period that a lot of traders will get stopped out in. And so you can see that once the market gave us that confluence and we started to push strength here, right here was when that trend continued. And this can be very good information for traders that are having a hard time understanding the market bias. Great example is here. You can see that when the market goes from, you got negative to positive momentum, negative to positive, this is the fast momentum changing, but the histogram and the BBs are just saying flat. And then what you do is you wait for that confirmation. And what a lot of traders will do is they will put a box around the chop zone. And I'm going to do that here. You see, when it goes from negative to positive, back to negative to positive, they draw a box around that level. And as soon as we break out in one direction, where you can see the histogram, if it was going positive, we would see positive bars and the BBs going like this. For this situation, we took out the floor, we had positive confluence between momentum and the BBs, and it was at that point where we started to get some follow through. We started to get the follow through in the market. You can see it pushed down for a really big trend. So whenever you see these chop zones, I really think these chop zones can be very valuable because they happen periodically, not all the time, but you'll see them once in a while. You'll get them into these environments. And whenever they change, or whenever you get those chop zones, you can see the market going from negative to positive, right? Back to negative, back to positive. And these are chop zones. Now, normally you're going to see them smaller. What we call these is a little bit more oscillating markets. When you get these big swings like this, that's oscillation. But if you start getting really small negative and positive changes in the velocity like this, then that's what we call a chop zone. Or when you get it over here, that's a chop zone. Whenever you see this going negative, positive quickly, then you know you have consolidation. And then normally you're gonna wrap a box around those. And what you'll do is you will wait for the break on one side of that, and that'll tell you when the trend is happening, okay? Now, the BBs, a lot of times what you'll see is you'll see these, and if you've ever heard of what we call the Bollinger Bands, the standard indicator Bollinger Bands it's not new, but whenever you see these like these big wide spreading bands, but then we go into these consolidation, these contraction points. Very, very important to pay attention to these squeezes. These contraction points tell us that the market is basically building a position. Okay, now if you can see how we changed in positive momentum right around here, market still isn't in an uptrend yet. The market gave us some positive momentum, but it wasn't until here where we really started to get confluence. And then all of a sudden the fast momentum dialed down. We went into what we call a squeezing scenario. And it wasn't until literally, okay, this bar, you can see it, it peaks its head. This bar right here was the starting point of the big move. And that was when we got out of that squeeze and we pushed up. You can see here as well, when we get these squeezes, I really think if you're a directional trader, pay attention to these squeezes. If you know the positive direction is up, you can see that the market is trending up. You can see that we've got green histograms. Right here, you can see this is what we call confusion. The market is confused. The market is trying to figure out, are we going to sell off or are we going to build a bigger position and head up? And what you want to look for, is when you know the bigger sentiment is up and the market consolidates into these squeeze points, I want you to look for that first bar that breaks the BB outside. And if you take a look, it's exactly what we did over here. And you have another opportunity for a really strong directional trade right there. Take a look, another big push at the end of the day. Now, I'm not saying you wouldn't trade the whole leg, but these are really, really great signals for when we get the squeezes, okay? And this is really important that if you pay attention to those squeezes, like watch what happened here. You can see, okay, the market pushed up, the squeeze happened. Take a look at where the first bar took place on that squeeze. Right here, right there, right? It was right here. That was the first time the market pushed out of the squeeze, and it's where the beginning of the trend started. And what you want to look for is you want to look for two patterns. You want to look for a directional shift first with the oscillator. Then you want to let the big momentum catch up. You want to let the market say, okay, this is where the market wants to try to go. Look, it goes up, consolidate, consolidate, consolidate. Boom. That was where we broke outside the Bollinger Bands on a directional push. And then if you think about it, that was the bar that set the tone. And that was the bar that basically set the demand zone here. We pushed up, we retested, and we had a huge push to the upside. Now you can do this on both sides of the market, just depends on the direction, right? If you take a look, okay, in situations where the market broke down, we squeezed, but we never broke back down below the BBs. You see that? So there was never an opportunity on this situation. Let's take a look here. We never had an opportunity. There was an opportunity here, right? We had a push down, we had a chop zone, and then this is a great example of a chop zone forming. Let's just grab a rectangle here. We went from negative to positive, back to negative. So if you take a look, negative to positive, and then whatever side it breaks, it didn't break to the upside. So if we're looking at it like this, as soon as we took out that was the candle that gave us the confluence on both the histogram right there. And that was the bar that set the tone right there. So there's so many ways to use the velocity momentum oscillator. The VMLean is considered one of the most widely used momentum oscillator tools across all of our traders. This is a proprietary tool we built. The fact that we give it away for free is a gift, so please take it with, with a lot of impact, that we've really done a lot to try to help you get the right tools and trade with these tools. You may not think that there's a lot going on inside of this tool, but truly there is. Under the source code, there's a lot, and we're going to post the code. You can actually use it and expand on it, and you can basically change it, edit it, move forward with it, however you want to do it, but just understand what's going on inside this tool. Now let's go in and basically take a look at the flooding. I have the ability to look at the histogram, so I can change the momentum based off of the histogram going above and below the zero line. I also have the ability to look at market structure. Market structure is when the market is ultimately in a higher sequence of higher highs and higher lows. So right here, we were in a non-trending market. We didn't basically get a series of higher highs and higher lows until right here is when we confirmed 2 higher highs and 2 higher lows. Now you can change the setting inside the oscillator to have either bigger swings or smaller swings. Just depends on your own settings. But if you want to look at the other sides of the structure, you can look at having both. And this will basically tell you when you have both momentum and trend, it's going to be dark reds and dark greens. You can see these dark periods is when you have both structure and momentum on your side. Now, most traders use the histogram as the baseline because it's the most responsive. And then they look at the market from a Bollinger Band squeeze perspective, or they look at it from just directional momentum. Now, one thing I want to do here is I want to talk about the excursion levels, okay? The excursion levels are very powerful. And if I turn them on, normally, if you're a reversal trader, you're going to turn off level 1 and you're going to look at level 2 and 3. It creates an area of interest that when the market gets down to these locations, okay, you can actually see the changes. So let's go over here. Let's take a look at this example. Okay. When the market got down to this lower excursion, okay, you know, what it does is it basically becomes very oversold. When the market gets up here to this higher excursion, what it does is it basically becomes overbought. Now, what I like to see, if I'm looking at trading this, I'm going to look for the first candle to show me a change in directional momentum. So what does that mean? Okay, if I'm looking at this here, I'm going to look at the momentum. Momentum's going down, going down, going down, going down, and there's the V, okay? This V is the first V that basically made higher momentum. It was the first close higher. So if you're really going to look as a momentum trader and you're timing reversals, your entry would be at the close of that bar and your stop would go below the low. And that would be a great trade from a momentum trade. Now, as a reversal trader, you understand that in strong trending markets, that may not hold. You might have to wait for divergence. But same thing here. Let's go to the upside. Same thing here. Let's zoom in. This was the first candle that made lower momentum. You would enter at the close of this bar, put your stop above the high, and you can take a look. There was a nice trade there. Right. Now, in strong trending markets, okay, like this, that's going to be hard to do because you might only catch a little bit of a move and then get stopped out, right? But on oscillating markets, these are very, very good tools to be able to use. Now, if you're looking at divergence, a really, really powerful divergence setup, okay, very powerful, is when the market gets to either these upper levels of excursion and then puts in divergence. So when you're at a complete extreme, take a look. The market came down here, came into an extreme level. So there was a direct correlation to being oversold to the bigger part of that tool. But then the market pushed lower and it came out of that large excursion level. And the entry for me on these types of setups, if I'm really looking to time some really good reversals, is when the market comes out of that divergence and it gives me the first candle to push outside of those BBs, like that right there. That will be the first candle. That would be the signal for me. That's the first strongest sign that you're coming out of divergence, making a lower low in price, and then the market shows you momentum. It peeks its head right here on that candle. That is where you get really, really crystal clear with pinpointing your entries. Your stop loss goes directly below these types of levels and you get big trades. Like those are big trades. Okay. So just little hacks, little tools in which you can play with. Ultimately, you know, you can see here that in a strong trending market, sometimes reversals don't work, right? If you had that divergence coming out of here, right? You make a higher high in price and then it gave you the signal right there, but you know, you would have got stopped out because the market just had really strong trends. So, you know, you got to determine, are you a directional trader? Are you a reversal trader? If so, how are you going to use the tool, right? And there's so many different ways to skin a cat with the VMLean, but I promise you, you are going to enjoy using this. Now, if you don't like the dynamic volatility, you can change it to static and you can put it to straight. And that will normalize the movement. It'll normalize the velocity swings and it'll basically keep things consistent. We normalize the data, which gives it a little bit more easy to read information. And this is just really there for you to identify, okay? So traders, one of the things I wanna do is I wanna go into the settings for a second and just explain the parameters, okay? So You can see that there's the band averages, the band lower, the band upper, the MACD connector, and the MACD dots. So ultimately, when you look at these BBs, you can change the colors of the dots and the connectors. You can also go in here, and this is very powerful, and you can change the name of the actual drop-down menu. If you look at the flooding, you can change the colors of the background shading, okay? And you can ultimately change the colors of the histogram, the BB parameters. You can play with the settings. These are set to the defaults. I wouldn't change those if you're a new trader. There's no need. You can look at the visuals to the actual MACD BBs, and then you can change the colors to the excursion levels. You can, change the lines. You can, if you want dynamic, and then there's the colors. And then ultimately, if you look at the swing structure, you can change the swing strength, so that way if you are using the market structure setting, you can use that to your advantage, okay? So I just want to let you know that there's a lot of ways to use this tool. If you have any questions on this, I strongly encourage you to watch this video over, and then ultimately if you want to use the MTF filter, which is one of the other videos on the channel, you can now be able to use that filter tool basically with an understanding of this oscillator, okay? Traders, if you like the video, give me a thumbs up. If you want, you can click the link below and you can get directed directly into the community to download the script. And hopefully you enjoy it. This is one of our favorite tools. It's widely used across thousands of traders, and it's one of the more superior tools. We do view this as a more superior oscillator over some of the basic standard tools. So have fun with it, enjoy it, and if you have any questions, let us know. Take care, traders, and happy trading.